You won't believe it, today was such a snooze in the stock market that I took my buddies out for lunch. On a Tuesday. That's how dead it was. My portfolio up a measly 0.06%. A whopping $2,400. Snooze fest. But hey, the shrimp scampi slapped, so at least something was exciting today. Anyway, let us talk about the real action. My 2030 goal of hitting $10 million in the public account. The insane $7.5 trillion in cash sitting on the sidelines. Sophie versus Robinhood versus PayPal, and which is the best by now. And we'll react to some big brain takes from Morgan Stanley, Morningstar, and even a little Amazon talk. Before we jump in, hit that like button. On a day this boring, I need it more than ever. So, I posted yesterday about my goal to get the public account to 10 million by 2030, and it blew up on X with over 350,000 views. Here's the real message behind that post. Never, ever set short-term goals for a long-term portfolio. I'm talking 5-year goals, minimum. Not by next December I want X amount. That kind of thinking leads to terrible decisions. Panic selling, buying back in randomly, while weighing with margin call options, and dumping good dividend stocks. It's a disaster waiting to happen. If you look back 5 years, my public portfolio was about $1 million. Today, it's over 4.1 million. If I had set a 5-year goal back then, I probably would have aimed for 2 million. But we totally crushed it. The point is to stay long-term, stay steady, and keep growing regardless of all the chaos. And yes, we will hit that $10 million target. Now, let's talk about the $7.5 trillion powder keg. Cash on the sidelines just hit 7.5 trillion, and that number is still climbing. It could be 8 trillion. It could be 10 trillion. Who knows? There are two major implications to this. First, any dip will get bought up fast. There's simply too much money waiting for an excuse to jump into the market. Second, it's incredibly hard to get a real crash, because millions of people have been sitting in treasuries for the last 1 to 3 years. Imagine earning 4% in T-bills, while the S&P is up around 79% in 3 years. The Nasdaq is up about 120%, Nvidia is up 1,200%, and Palantir is up 2,000%. Treasuries were a trap. One of the biggest traps in decades. People are itching to get back into the market, and that creates a giant floor that supports everything. Now let's talk stocks. First up, Sophie. Its growth is accelerating, and it's not dependent on stock market hype. It's more like a digital-first bank where people refinance high-interest debt into Sophie loans. They're expected to have 25 to 30% growth next year. Then there's Robinhood. It lives and dies by trading activity. If the markets slow down or crypto quiets down, their numbers suffer. Expected revenue growth next year is around 15%. It's still a solid business, but it's way more cyclical. And finally, PayPal. This one is the sleeper. Its forward PE is around 13, and its 2-year forward PE is around 11. Growth is pretty mad, 5 to 6%, but the downside risk is tiny, because the valuation is just so cheap. My play, I own both Sophie for its higher growth and higher risk, and PayPal for its cheap valuation and safety. It's a nice balance of fintech aggression plus stability. Let's hit a few quick reactions. First, Mike Wilson from Morgan Stanley. This guy used to be ultra bearish, but now he's talking about a rolling recovery. He believes we already went through a rolling recession, that layoffs signaled the bottom, earnings revisions are exploding upward, and that we've entered a new economic cycle. It's a very interesting pivot, especially from someone who is expecting total doom. Next, Morningstar on Tesla. Their analysts are celebrating Tesla again. Basically, competition is fierce, and margins are under pressure, but the long-term brand power and the potential for autonomy are still in play. It's still a volatile stock, but it still has massive potential. And Amazon. You already know I love Amazon. Cloud dominance with AWS. Advertising is growing huge, and their retail efficiency is constantly improving. Amazon is still one of my favorite long-term mega-cap stocks. Boring market day or not, the next 5 years are going to be wild. Focus on your long-term goals, avoid the traps, and stay invested. Hit that like button if you enjoyed this breakdown. Subscribe if you want more reactions and analysis, and I'll see you in the next one.